Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I zoom in here, you can see that I left my lines on the chart from last week's forecast, where you can see that red diagonal line, which I refer to as my zip line. The downside target was reached at 331.43, and we are now very slightly below this support level, but it looks as though we have a buy signal on the CCI and we have a pivot on the stochastic. Now, the increase in volume today on this big green candle tells me that the bulls still have some upside momentum. So, remember, we have a shortened trading week next week. I believe that Tuesday, possibly Wednesday, we're going to move right up towards that moving average with a price target of 333.76. So we do have a pivot. That would put us right back into this trading range or trading channel that I've been referring to now for just about a month. And so until we significantly break out of that channel, we will stay in the channel. That's the way it works. Now, remember that target that I have right there at 333.76, bring us right to that moving average. If we get a downturn or a pivot from that, then we'll most likely take out the lows from yesterday and possibly go down towards filling these gaps down here. So I think that we'll see a rally maybe up to Wednesday. There seems to be a little bit of an extension in the X date. We found some money, right? Tax receipts might be coming in here. We have until June 5th now, so that buys a little bit more time for these negotiations. Now, keep in mind, I'm seeing a lot of manipulation in the market. I'll get to that in a moment, but be very, very careful. As I've stated many times, my long-term targets are way down. That does not mean we cannot take any short-term long positions. In fact, our members do have slight bullish positions and vertical spreads and such that will make money on the way up. But my longer-term targets are way down. The majority of our positions are diagonal calendar put spreads, so we have negative delta. For those option traders out there, you know what that means. And so we are in this range and we could trade it. That's opportunity. Now, IWM, you'll see here that we also hit my downside target. We hit that yesterday at 173.89. And what do we have here? We have a green candle, a pivot up on the CCI, back up over that momentum line. I think that next week, possibly up to Wednesday, I think IWM will make a move to fill that gap. So I'm being conservative with my target at 177.10. And that's for IWM. Looking at the Qs, which is, again, where we're seeing the AI craze, right? There's a frenzy for AI that has pushed the Qs higher. Keep an eye on what we're seeing here on the weekly chart. You can see that we do have a big green candle. We do have an increase in volume, and we do have a slight gap right up here that is just about to fill. It's not quite there yet. We're pennies away, but that will most likely act as a resistance point. So pulling that back to the daily chart, I'll give you my forecast. I think the Qs will go up to that level, and that is right there at 350.30, at which time you got to keep an eye on that volume. We did have a slight drop in volume today as we're approaching that resistance. And as I zoom in here, you can see that we do have gaps below the market as well. There is a gap. So once we pull back from that resistance and we see that drop in volume, I will be focused on these downside gaps right there. And ultimately, I think we're going to move back down to other gaps down below the market. Okay, so that is QQQ. Now, if we look at the spiders, ticker symbol SPY, you're going to see that we have, again, another target that is hit. We had a downside target. It was being very conservative. The downside, we hit that target of 414.47. This is a big green candle. We do have the momentum still going higher, and there is this gap still up there at 421.22. We might even go so far to fill this very slight gap. Let me make sure that that's a gap. That low is 425.50. That high is 425.26. So we have 24 cents of a gap right above that. And so I'm going to go and say that that gap will most likely fill. So I'm going to go up just a little bit higher on SPY, just a hair higher, just slightly over that first gap fill. So I'm putting a target of 421.22. Look at the momentum shifting higher, but there's going to be heavy resistance up here at the 430 level. Our option traders know exactly what to do here. We will be putting out some trade alerts next week on how to manipulate and maneuver our positions into place so that we can capture the most credits in cash as we roll the positions up, down, and sideways. That's SPY. Now VIX, I'm going to tell you, this is absolutely incredible that the VIX is dropping again below 18. I've said this before, I'll say it again and again. Never have we gone into a bull market with the VIX this low, right? The VIX is a fear index, and don't believe what you're hearing about the VIX being obsolete. We have the one-day VIX that is out there for the 0-day to expiration options, but this VIX right here, 30-day VIX, is still very relevant. I still think we go a little bit lower next week, maybe take out those lows Tuesday, possibly Wednesday, but I'm leaving my upside target, which we came very close to hitting on Wednesday. That upside target is 21.37. Again, one more look at the one-day VIX, which is VIX 1D. You can see that big green candle right there. This one-day VIX is going up while the 30-day VIX is going down. This is very interesting. Now, again, I think the one-day VIX, I don't want to get too far into forecasting this because there's not enough history for me to rely on any signals, but this one-day VIX is very interesting. I think this will start to move lower on Tuesday and Wednesday and then start to pivot up because you can see we have higher lows followed by higher highs, and this is the second highest reading on the one-day VIX than what we had back here on May 3rd. So that's VIX. Now I want to talk a little bit about the manipulation that I am seeing. MRVL is one that I'm bringing up right now. It's Marvell. Again, the AI craze is still out there, and I showed our members this, but I want to show you the evidence and how I see with my own eyes, and you will see for yourself as well, the manipulation. Obviously, the stock is up about 32%, but as I mentioned to a lot of our members on the webinars that I do, let me show you the manipulation. It happens in the after hours. Okay, so yesterday after the close, we had this big print down here. See this big move higher after hours? Now you see this volume right here was a big volume print 1 minute before they came out with their earnings. Then it's followed by very small volume because in after hours you could push the market up pretty hard on light volume, which they did. And I told our members, watch out a minute or so, or maybe 3 to 5 minutes before the opening, you will see another pump higher. We see that right here. I'll zoom in here for you. See that pump higher right before the opening on light volume, almost no volume down here. They pump that up. And what happens on the very first print? We have as much volume right there as what we did on the close from yesterday. Now, what is that? That is basically a pump and dump. There is nothing illegal about this at all. It's totally legit. But what happens is people fall victim because they buy into the hype. You see that volume bar right there? Look how that compares to the volume right here on the opening. And then on the close, what did they do here today? They did another big push higher 1 minute before the close, and now they're continuing to try to push it in the after hours. Now I'm citing Marvell Technology, MRVL, because I want to show you how this is happening, why it's happening, and who is doing the manipulation. This is Yahoo Finance. You can look this up on your own. Type in MRVL, and you're going to see who the institutions are who own this stock. The institutions own almost 87% of the float. The float is the shares that we get to trade. Now, they cannot sell their position outright without crushing the stock on themselves. Look, you got Vanguard, you got BlackRock, you got T. Rowe Price, you got JP Morgan, Goldman Sachs. These are the big players. They own all the shares. So what do? They create some frenzy, some buying frenzy. They put the news out. They beat the earnings. This is not just Marvell. It's happening with Nvidia. It's happening with AI. It's happening with a lot of other stocks that are in this AI craze. And now what I want you to do, if you can take a screenshot of this or just save this report, I want you to keep an eye on this report at the end of June. You see, Yahoo Finance reports at the end of each quarter. What is the evidence that I'm showing you? Well, if you go to June 30th, when the next report comes out, you will see the number of shares that the institutions hold will go dramatically down because they're dumping it into this craze. And you will also see the percentage that the institutions hold with regard to the percentage of the float will also go down. That's my evidence. It's going to take another month before we get to see those numbers, but I'll be sure to point that out to you because we're taking good notes ourselves, and I'd like to show people the evidence on how that works. Now, let's go to the geopolitical news. First and foremost, I want you to take a look at the economic leading indicators here. They are dropping below the warning levels. You see this red line here? That's the recession signal. The black line is the warning signal. We are now down below these, and you can see that each time we drop below these warning levels, we went into a recession. This was the Great Recession of 2008. And so they don't have any gray area showing up right now signaling a recession. But I'm telling you right now, I think the next recession is going to be longer and harder and deeper than what we saw in 2008. And we may even go into a depression. What is a depression? It's a prolonged recession. So don't be fearful of that. There are opportunities that surface in recessions and depressions, especially in the stock market, if you know how to keep your powder dry and strike when the signals tell you to strike. So those are the leading indicators. Now, this is coming from the IMF. The managing director of the International Monetary Fund is basically talking about the greenback, which is our US dollar, gradually being abandoned. Now, I've talked about this. This is happening next month, where in South Africa, the BRICS are holding their summit. There are more nations joining the BRICS nations than ever before. And what is their number one topic on their agenda? Well, there it is right there, the creation of a BRICS currency. So they're creating a parallel economy to bypass the U.S. and the U.S. dollar. And if you don't think that's a threat, then you're buying into the hype put out by the financial media, and they're not covering this. I've been covering this for months now. Keep your eye on this summit. Very interestingly enough, what happened? The Defense Department uncovered an accounting error to the tune of $3 billion. This is just a testament to how irresponsible our government is when it comes to money. I want to show you what's happening here in real time. This is the usdebtclock.org. You can go here, and I encourage you to do that. I want to point out some things that are right in your face, obvious. First and foremost, look at that national debt. Look at that thing going up. Now, so if you don't think there's a reason to cut back on our spending, and you think they should just keep raising the debt limit and taxing our citizens to the hilt, then I don't know what else to say. But that number is getting larger by the second. Now, the two cells that I want to bring up to you in this box alone is the GDP as it relates to the national debt, the federal debt, right? In the 1960s, our debt was 52, almost 53% of the GDP. Look where it is right now. We're 120% of the GDP. That means we're spending more money than what we're taking in as a nation. Another thing, look at the tax revenue. Now, you're going to have to stare at this for a little while so you can see the pace at which this is really moving. But take a look at this number right here. Just stare at that for a little while. You can look at how every second we're going up $10,000 right here. All right. Now look at that as it compares to the interest on the debt. This is just the interest on the debt. Look how fast the interest number is going up in comparison to the tax revenue. See, sometimes you need a report like this to just stick it right in front of your face so you could see what's going on here. Another thing you want to pay attention to is what's happening with the savings per family, which is $9,000 per family. But take a look at the average debt per citizen compared to their savings. $74,000 per citizen as compared to $9,000 in personal savings. Now, I think that's even high. I mean, I don't know what the census is telling us as far as who the families are that have $9,000, but I know a lot of reports are coming out and talking about how people are living month to month, and in some instances, living week to week. Now, again, there's no need to panic. You keep your eye on the charts. You stay connected to my 7-point trading checklist. You trade according to your risk tolerance and you manage risk, allowing the market to take small amounts from you when you're wrong and learning how to ride the waves and ride those profits when the markets move your way as well. Very, very important that you do that. Now, stay tuned to the very end of this. Thank you so much for liking and sharing and commenting. We really appreciate that. It builds the channel. It creates awareness about technical analysis. And if you stay tuned to the very end, you'll see how to get in touch with my 7-point trading checklist. Remember, the markets are closed on Monday. It's going to be a shortened trading weekend. You have a good long weekend. Be safe, and we'll talk to you on the next report. So long. There's no more damaging formula than to mix emotions with money. Listen, we're made up of emotions. We have fear, we have stress. The trading checklist helps take that all away. And now, wow, take a deep breath, relax, and enjoy the ride. You might be completely foreign to technical analysis. You may not even know what a bullish engulfing candle is or a shooting star. That does not matter. The great thing about what I'm showing you right now is I'm taking 40 years of experience here and I'm breaking it down to 7 points that you can follow through a trading checklist. Look at any stock, any ticker symbol using the 7-point checklist that I have and determine who is in control of that price action. I'm AJ Monte, and this is my 7-point trading checklist.